Hi guys, if you're preparing for advanced accounting, I'm sure you would have seen in AS21 consolidation there is one question called variety limited. In full syllabus, this one question alone is new question in AS21. I have seen most students skipping this because the question itself is so scary with a double acquisition and there is tedious etc. So in this video I thought I will help all of you out. Just give a video of 30 to 40 minutes solving this variety limited problem where we understand the core concept in this sum and also learn how to solve what is required for exam, and if it comes in exam we will get 10 marks. Enjoy the sum guys. So hi guys, resuming accounts class. Previous class we were discussing consolidation of subsidiary and we learned three sums were pending. If you remember those three sums, they were basically illustration 5 and 2 practical sums. First let's do of the small sum, illustration number 5, and then we'll do the one full sum and then we'll close this session. We just have three sums. No other concept is new, it's just practice. Now illustration 5 is a new sum added in the new study mat, which is not there in the old study mat of consolidation. So you can mark it as important. Is it 5 everywhere? Study mat also 4. For you guys it is 4. Question I say study mat question 5. For some of you it will be in our book illustration number 4. It's a new sum added. Now start guys. Let's read the question and solve. It's nothing difficult. You don't have to prepare consolidation over here. It's just one small step that you have to do. I will solve it. First time, see there are some sums that when we are doing it for the first time, it's not going to be easy to do by yourself. There are in fact some sums when I myself look at the book, first time I may not understand how the solution is derived, but when you look at the answer, we can reverse look and understand, okay, this is what they have done. Are you following guys? Okay. So some sums you don't feel like you don't know what to do. The more you practice, you will get it. Variety Limited holds 46% shares of VR Limited. Who is the holding? Who is subsidiary? Variety is holding, VR is subsidiary. For holding subsidiary, you need more than half. This is what? 46%. No holding, no subsidiary. Are you following, guys? You can't be in the same flow. This holding this subsidiary. Holding 46% means no holding, no subsidiary. Are you getting it, guys? The shares were acquired at a market price of 17 per share. How many ever shares they purchased? The balance shares of VR are held by a foreign collaborating company. What is the balance shares percentage? 54%. That foreign collaborating company only is holding company. Correct? They have 54%. I am the minority. A memorandum of understanding, MOU guys, has been entered with the foreign company providing the following. Who entered into MOU? Variety Limited and foreign company. So the structure if I draw so far, it's somewhat like this. Variety in VR has 46. This 54% is with some foreign company. Between Variety and foreign, we are now entering into an MOU. This only is the MOU. What is the MOU below? The shares held by the foreign company will be sold to Variety. Now I will become holding. I will become a holding of 100%. Correct? So Variety is taking over shares from foreign. So I am purchasing how much guys? 54%. For which I have to pay something. That means you have to compute purchase consideration. The price per share, how much to pay to whom? Foreign company, is calculated. A little bit of amalgamation chapter in consolidation. If you don't know amalgamation, you have to pause the video, go back, watch full amalgamation, especially computation of purchase consideration part is calculated by capitalizing the yield at 15%. What is yield? Yield for this purpose would be 40% of the average pre-tax profit of the last 3 years. Okay, they have given first paragraph to compute purchase consideration. Let's go to second para and come back. Very easy. You have to take average profit, take 40%, fine. capitalize at 15%. We have done a similar method in amalgamation, but I'll come back to the adjustment later. The actual cost of the shares to the foreign company was 5 lakh 40. Foreign company purchased this VR at 5 lakh 40,000. Are you following, guys? The profit that would accrue to them, what is the profit they will get, foreign company? They purchased at how much, guys? 5 lakh 40. Now the profit is what Variety is going to pay them. Let's say, for example, Variety is paying 10 lakhs. Then the profit is 10 lakhs minus 5 lakh 40. Are you understanding? See, if you are the foreign entity, you purchased VR for 5 lakh 40. Now whatever consideration I get minus my cost will be profit, correct? So my cost is 5 lakh 40. The profit that would accrue, how I will find profit? Above step I will compute PC, correct? The profit that would accrue to them would be taxable at an average rate of 30%. That means what? Capital gains. Are you understanding? Capital gain taxation on sale of entity 30%. The tax payable will be deducted from the proceeds and Variety will pay to the government. What is that? TDS. So whatever consideration I have to pay, I will deduct my TDS and balance only will be paid to the foreign entity. So now they are with consolidation chapter, we are including PC of amalgamation, PC computation plus income tax little bit. Of the net consideration, 50% would be remitted to the foreign company. That means if 100 is the amount payable minus TDS, correct? Balance only is net consideration. Are you following, guys? You know TDS, income tax, everybody would have studied. TDS is you deduct the money and pay the balance. Of the net consideration, 50% would be remitted to the foreign company immediately and balance is payable as an unsecured loan payable after 2 years. So to summarize the transaction, Variety Limited, who has 46, is now buying 54 from foreign. For that they gave 3 adjustments: adjustment A, adjustment B, adjustment C. Adjustment A tells me how to find PC. Adjustment B tells me while you are paying this PC, please reduce TDS. Adjustment C tells after reducing TDS, pay 50% now and 50% is converted in the form of loan. So for example, if PC is 100, they gave TDS as 30%. So I will reduce 30% as TDS, then I will be left with, in that 70 pay 35 now, 35 converted as later. That means my sum revolves around computing 100. If I find PC, sum is over, correct? But still there is some paragraph below. The above agreement was approved by all concerned for the time being, given effect to 1st April 20, that is the date of acquisition. The total assets of VR, now only we are coming to subsidiary, the subsidiary VR, as on 31st March was 1 crore. It was decided to write down PPE, current liabilities, some adjustment and share capital breakup they have given. They have also asked to find out goodwill or capital reserve. So you have to compute what you paid versus what you got. What you got only is this para. Are you understanding? Net assets. Look at this, cost of the total assets, asset liability they are given over here. So what I got is over here. What I paid is point number A. I can compare both and find goodwill or capital reserve. That is the last step. First let me do A, B, C. Did you get the whole structure, guys? Whole structure is find PC, reduce TDS, split into what is paid now and what is payable later, and then find goodwill. How will I find goodwill, capital reserve? Compare PC with what I got. Are you understanding, guys? You got the flow. So we will go in the same flow. First I will compute PC. You will help me. Forget the entire sum. Just focus on the first paragraph, guys. This one, point A. How to compute PC? First they are saying it is computed by capitalizing the yield at 15%. So whatever is the yield, I have to capitalize. I am first computing PC, guys. Whatever is the yield, I have to capitalize at 15%. That means I should get a return of 15%. In other words, assume yield is 15. 15 divided by 15% is 100. On my total, my return should be 15. That only is called yield. Are you following, guys? But they have not given what the yield is. They have told yield is nothing but 40% of average pre-tax profit of last 3 years, and last 3 years profit is 30, 40 and 65. So what is the average of last 3 years, guys? Quickly compute with me. 30 plus 40 plus 65. 30 plus 40 plus 65 whole divided by 3. My average is 45, correct? But we are not taking full average. What is saying? 40% of the average, correct? So what is 40% of 45? 18, not 18 lakhs. So my yield is 18 lakhs. If I have to get 18 lakhs as return, what is the capitalized value? 18 lakhs divided by 15%. 120 lakhs is my purchase consideration. Point A is done. Are you following? Only question looks complex. Steps are simple. Are you following, guys? Understanding? I am just following what they told. They told take average of last 3 years, apply 40% and then capitalize at the yield of 15%. So yield is computed at 45 into 40%, 18. 18 divided by 15%, I got 120 lakhs as PC. This is what Variety will pay the foreign company. Are you following, guys? Everybody clear? Let's go check. That should be the answer. Okay. 120 lakhs is what my consideration is. Step 2 is what? I have to find TDS. But to find TDS, I should first find gain. So this company, for foreign company, what's the gain? They purchased at 5 lakh 40. Look at this question. They told they purchased at 5 lakh 40. Now follow very carefully, guys. Look at this. Now purchase consideration is 120 if you buy the whole company, correct? What do I mean by whole company? Look at this. The shares held by foreign company will be sold to Variety. The price per share will be calculated by capitalizing the yield at 15%. That means the whole company's value is 120 lakhs. What I have to pay is, I have to pay for the shares held by foreign company. How many shares are totally available in this question? Look at this. The paid up share capital of VR is 20 lakhs. 2 lakhs into 10. So now come down here. 2 lakh shares. I am already having 46. Foreign is having 54. How much is this? 92,000 here. 1,08,000 only I am buying, correct? But what has happened? The whole company is worth 120 lakhs. In amalgamation chapter, we used to stop the sum with 120 lakhs, correct? Because in amalgamation, I am purchasing the whole company. But here, you are purchasing only 54%. So I have to find proportionate price. So can I write 120 lakhs is the total value, out of which the total shares is 2 lakhs. So per share is 60 is what is worth per share. Let's check. So per share price is 60. Are you following up? See, in amalgamation we never did this step, because in amalgamation we used to stop with 120 lakhs, if those who remember amalgamation, and pay full 120, because you are buying the entire company. There is no minority in amalgamation, correct? Here I am getting only 54%. In other words, I am buying only 1,08,000 shares. So per share is worth 60. How much should I pay them? 1,08,000 into 60, which is 64,80,000. Or in other words, you do 120 into 54%. This is what I'm going to pay. How much, guys? 64 lakh 80. This only I should pay. Are you following, guys? Vishnu, getting it up? Now this is a sum which is mixing PC from amalgamation and consolidation concepts. Are you getting it? So the consideration I have to pay, purchase consideration, I have to pay for 54% shares is 64 lakh 80,000. Are you following, guys? Clear? So now what is the gain foreign company got? Now I'm going to B. Foreign companies gain. Before that, let me revise whatever we have done till here. First I computed the value of the company by capitalizing yield at 18 lakhs by divided by 15%. We got 120 lakhs is the value of the company. But in that, what I already have is 46%. So why should I pay for what I already have? I will only pay for the difference of 55% and take home 1 lakh 8,000 shares is what I'm going to take home now. For that 1 lakh 8,000 I have to pay 60 per share, which is 64 lakh 80. In other simpler way, you can do 120 lakhs into 54% and find 64 lakh 80. For the foreign company, they are getting how much? 64 lakh 80. They are paying how much? Their cost is 5 lakh 40. So their profit is capital gains 59 lakh 40,000 is my capital gain. On this, don't worry about income tax rates. Here they have straight away given tax at 30%. How much? 17 lakh 82,000 is the amount of tax, or in other words, TDS that I will deduct. Let me cross check. 17 lakh 82,000. Can you see here, guys? 17 lakh 82,000 is the amount of TDS. Now what I discussed in the start of the sum, look at this. Come back here. If you remember the start of the sum, first I will find the PC, then reduce TDS and then split half. So what is the PC, guys? 64 lakh 80,000. Come to step number C. Step number C, 64 lakh 80,000 minus TDS. How much? 17 lakh, correct, 82,000, which is my TDS which I will pay to the government. So what is the balance I have to pay, guys? 46 lakh 90. This I will pay in two forms. Like how? 50% I will give in the form of cash now. 50% is converted to loan. What is that 50-50, guys? 23 lakhs. Here also 23 lakhs 49,000. Are you following, guys? Come down, look at the answer. 23 lakh 49,000. The first part of my sum A, B, C, D is done until discharge of PC. Are you following, guys? This has nothing to do with consolidation. Has nothing to do with consolidation. It's just computation of PC. New sum in new study mat. So we are learning. Are you following, guys? Again, step 1 find PC. Step 2 reduce tax TDS. Step 3 find the mode of dispersal. Kalyan, getting it clear, guys? That's it. After this, what I should do? Compute goodwill or capital reserve. Now goodwill or capital reserve is what I paid with what I got. Correct? Now very careful, guys. Here, after this takeover, you have 100% share. Everybody understood till here? Anybody making a note? Everybody copied this? This part done, guys? Anyway, answer is done in study mat. Same thing only, just more detailed steps. This part done, 6480. I hope this part you got it. Make a note. Recording, please pause and write down. Otherwise, also answer is there in study mat. But please write off when we are solving itself so that later it's, and this is the last step. Anybody writing this? Book also is there. Study mat, I think the answer is given in a much more condensed manner. Same thing. Done, guys. And this is the last step, mode of payment. Somewhere you make a note, or at least if you know how it's come, that's it. Now I have to find goodwill or capital reserve. Those who are writing, quickly make a note. How much? 2 lakh? 19,000 is Kalyan's goodwill. I will tell the logic. Tell me if you do the same thing. What I paid versus what I got. What I got, now I got 100% of the company. Correct? I got the full company now. I am the full holding. No more minority. So what I got should represent net assets of 100% of company. What I paid is of two forms. First, I already acquired 46% and now I am acquiring 54. So I have to take both. Are you following, guys? So what I paid includes double thing. Now what I paid for 54, what you paid, guys? 64 lakh 80,000. Correct? This what you did, Kalyan. So what I paid for 54 lakh, 64 lakh 80,000. The common mistake everybody does is they take only 64 lakh 80 and you forget to take 46% which was already paid in the past. How much did you pay for 46%? Can you find out from the question? They are given a subtle hint in the question. Look at the first line. Was acquired at a market price of 17 per share. Correct? So, how much you purchased for 46%? 92,000 shares. So, what you paid is 92,000 shares into 17. How much? 15? 15 lakhs? 64. Correct? No. Add both. How much you will get? 80 lakh? 40? 4. This is what I paid. Cost of investment. Are you understanding, guys? Vignesh following. What I paid is 64 lakh 80 plus 15 lakh 64. What I paid now. This is what I paid now. This is what I paid in the past. Don't write that in exam. Past nominal. 46%. 15 lakh 64. 54. 64 lakh 80. Are you understanding, guys? That comes to 80 lakh 44,000. That only should be there somewhere here in the end. 80 lakhs 44,000. What I got is there in the question in the paragraph below. Net assets. Straight away they give. Total assets is 1 crore. But look at this. 1 crore is my total assets. But from this, I have to reduce property, plant, equipment by 1 lakh 75. So I have to reduce 1 lakh 75,000. Any other adjustment? Current liabilities on the same date is 20 lakhs. I have to reduce what? Current liabilities. So you find net assets. What's your net asset, guys? 78 lakh 25,000. So I am making a statement. Tell me if statement is correct. For a company VR which is worth net assets 78 lakh 25,000, I have overall at different points of time paid 80 lakh 44,000. So my goodwill will be 2 lakh 19,000 is the goodwill. Check the answer. Answer also says goodwill is 2 lakh 19,000. Are you following, guys? Clear? Hello? This is the first time I am also solving this sum. Now, sir, new sum, sir, how you got it correctly? No, I am being honest. Any faculty will first to go look at the solution. I don't have exam. I looked at the solution, understood the solution, I am taking it over here. Are you following, guys? I can sit down and solve. It might take me half an hour to understand. I don't want to waste time. So everybody will look at new syllabus, new questions. How do I know? I am just being honest. I looked at the answer. I know how to solve. I am teaching how to do it. Now you also know how to do it. A similar sum like this comes. You know how to tackle it. That's all that matters. Are you following, guys? Clear? Understanding, guys? Easy. You can mark the sum as important or double important. New sum in new syllabus study mat. That means in the initial few attempts, the examiner will want to ask this for a solid 5 or 10 mark question. I think it's easily worth 5 or 10 marks and it's easy also. But if somebody has not seen the sum, you will definitely struggle. Somewhere you will get stuck. Of course, some of them will get it correct first time. That's good. Understanding, guys? Easy. Hello? Perfect. Can we proceed, guys? That's about it. I think this is the only new sum which is there in our study mat of consolidation of subsidiary. I've seen like approximately 1 hour and then jump into other new topics. Okay, fine. Any doubts? Hello? Fine. Then thank you guys. See you all in the next session.